Dear member and guests, welcome to our December technical meeting. My name is Panit Jesadawaranon. I'm a vice chairperson for this program. We hope you stay healthy during this period. Under this challenging environment, we still continue with our mission to keep you informed about what's going on in industry with our technical presentation. This month we have a very special speaker from Bangchak Corporation, and we will broadcasting this event to YouTube Live as well. Our mission here is to open and share information across our peer and companies, so we can provide energy to our kingdom and of course meet many new faces. We hope to see a smile on your face, and as you can see from my head here, hopefully you enjoy turkey and ham that we provide outside. Okay, for agenda for tonight, we start with the similar format. We start with the section announcement, updating SPE Thailand status, followed by presentation by Kun Marshall Hood from Bangchak Corporation. And then after that will be a question. And then we move on to closing remark. Today we have 842 valid members. We have 393 professionals and 449 students from Chulalongkorn University, Sulanari, Pinop Songkla. Not only to retain, but our section has gained new 52 professional members since the beginning of the year to date. And as usual, we still have almost 160 professional member that has not renewed their membership. So may I remind you that please check your membership status and consider to renew it. To all of us, please also invite our colleague to join our meeting, and even better, to join SPE as well. So as always, we need the new members. SPE Thailand is still the largest oil and gas professional industry organization where we regularly meet in the very relaxing environment. On the SPE membership, there are plenty of reasons why you should join. I will not go through all of them as you can see on the screen. But as you may be aware of, we are the most active section in Southeast Asia. So it's a great opportunity for you to network, share knowledge, and socialize with the people with the same interest in our industry. Okay, and this is very, very important slide for tonight. Maybe more important than what Kun Marshall gonna present. So if I may, please a round of applause to our sponsor that can make tonight happen. So compared to the last season, we have some O1 back, and we have two new names for the first time, PIS Asia and Uniwise Offshore. We're proud to have 33 companies that support us so we can continue our program in a nice venue like this. Especially for the SPE member tonight that you have a fairly special rate. For those who just joined us, an opportunity here for your company logo to be up there. So if you are interested, please contact any of the board members. Our society need you. Okay, without further ado, let me hand over to my SPE boss, Kun Kasian, program chairperson, who will do honoring to introducing our speaker tonight. Thank you.
I don't know why you keep calling me boss, but I'll take it. All right. Wow, it's always good to see you guys. I think we've been around together for many months, and I think we can call you a family now, right? I mean, all the family of faces. And of course, you join so many months. You know that month, December is not our regular, right? But this year is nothing is normal. Right? Everything is new. We don't have March, so we make up to December. And as we said before, you guys cannot travel, so you stick around and stay with us. Enjoy the ham and the turkey for a Christmas treat. So without any further ado, let me start introducing our speaker tonight. So he has more than 15 years of technical and operations experience in oil and gas and other energy-related sectors. An explorer by heart, he has worked in many prolific hydrocarbon-bearing basins all over the world as a geoscientist and been part of several play-opening discoveries in both Southeast Asia and Africa. During his time with Ophir Energy plc, he worked in a Tanzania subsurface team that discovered more than 15 TCF of gas resources across several discoveries that put East Africa on the map as an LNG mega project hotspot. More recently, he worked in the Gulf of Thailand on explorations and development projects with Bangchak upstream oil and gas investment that has included project in the North Sea through Norwegian independent Okia ASA. He has a Bachelor of Science in Exploration Geophysics with honor from Curtin University of Technology, Western Australia. Ladies and gentlemen, please welcome Mr. Marshall Hood, Chief Operating Officer, Natural Resources, Bangchak Corporations on the stage.
Well, yeah, thank you very much for the introduction, and yes, I'm honoured to be the first SPE Christmas function speaker. So yes, it's great, and yes, I've been a long time audience member for the last few years at SPE, and it's great to get the opportunity to talk to everyone today. So. So I've got a bit to get through, so I'll kick straight off. As I mentioned, as the introduction mentions, I want to talk a little bit about the changing EMP landscape, and something that Bangchak is heavily involved in is in the North Sea, and how we've seen a change in operating environments and investor landscapes that has stimulated opportunities for smaller, agile and nimble operators to extract value from mature basins. So. And then how we can take some of those learnings back into Southeast Asia. So talk a little bit about the North Sea and extracting value from what's been left behind, and then how we can take that into Southeast Asia, what opportunities could exist in Southeast Asia, and what strategies we can use to to extract more fresh barrels and more value out of mature basins. So this first plot is an oil price plot. It's a bit hard to see the numbers there, but in the yellow is the oil price from the last 25 years, and overlaying over the top of that is the M&A activity from the last 20 years, from 2000 through to 2020 in the North Sea. And there's a couple of main areas I want to draw your attention to. The first one is this sustained period of M&A activity through from 2005 right through to 2014-15, where we saw a consistent approach of independents and majors gradually divesting and exiting some of their portfolio and some of their assets in both the UK and Norwegian sectors, and the buyers being national oil companies and some utilities that were driven by security of supply and economic hedge rationale on the back of quite a significant rise in the oil price, into the hundreds of dollars of barrels. What we saw was a period of 2 years in 2015-16 where we saw very little M&A activity, and as you can see, the oil price fell away, and really been put down to the fact that there was difficult to manage the buyer and seller expectations. So with a falling oil price, it was difficult to close transactions. And then what we've seen in the last 3 years or so is a huge spike in M&A activity, and that's really been driven by private equity-backed companies in the North Sea. There's been $27 billion worth of private equity money being invested into the North Sea in the last 3 to 4 years. And really what they've been doing is acquiring mature, late life assets and trying to extract value from those portfolios. So it's quite an interesting spike here, and what we're seeing in 2020 is, of course, very little activity for obvious reasons because of the oil price volatility and the pandemic. So these new buyers, private equity based, have different strategies, different timelines, different focuses to some of the large independents and majors. What have they been focusing on? So here on the left-hand side here is a field size distribution from the Norwegian continental shelf, and what you'll see here is that there's still 20 billion barrels. Over 20 billion barrels of yet to find potential on the Norwegian continental shelf, and you'll see that it's vastly underrepresented in the sub 250 and 100 million barrel range. It's quite obvious, right? Majors have been in there. People come into basins early on. They drill the largest prospects. They drill the big oil fields first, and then they sit on them. And there hasn't really been a focus on small prospects and small fields. In addition to the yet to find potential, there's also more than 2 billion barrels of stranded discoveries, less than 100 million barrels, sitting on the Norwegian continental shelf with no development, timeline or strategy. So this is what private equity have seen and recognised, that for majors and large independents, that this 100 million barrel, sub 100 million barrel focus is not something that is going to move the needle for them in their global portfolios. If you then also look at these donut plots here, what I'm trying to show here is that on the Norwegian shelf there's around 4 million barrels a day of production in 2018. Of that 4 million barrels a day, 81% was coming from fields greater than 100 million barrels. Only 19% was coming from fields less than 100 million barrels. And breaking that down, those fields were operated by 75% of those fields are operated by the majors. If you then compare that to the Gulf of Mexico and the UK continental shelf, it's a gradual change as the basins become more mature. In the UK, almost 3/4 of the production now comes from fields less than 100 million barrels. And you'll see when you break that down that the independents are the dominant operators of those small fields. So naturally, in the next 10 to 15 years, the expectation is that in Norway, we're going to see, this flip to be more like what we see on the UK side. Why is the UK ahead of the Norway? They have the same geology, but it's really down to the way that the UK has promoted and attracted smaller and agile and nimble operators in the last sort of 10, 15 years. So, and the majors have really had all of the Norwegian continental shelf tied up. So that then leads us to Bangchak and who I work for. And Bangchak entered the North Sea in 2018 on the Norwegian shelf. We acquired 2 fields from Shell, a $500 million transaction to acquire 2 fields, the Draugen field and the Gjøa field. We did quite innovative transaction with Shell where we made Shell decided to retain 80% of the net decommissioning liability. And what that allowed us to do was Shell were comfortable doing that because they recognised that we were going to be a lower cost operator. We were going to look to extract as much value as possible out of a mature field, these mature fields, and therefore there was a good opportunity for them to push out that decommissioning liability. So OKEA with Bangchak being the major shareholder, took over operatorship of the Draugen fields in 2018, and also recognised some significant 2C and exploration upside in and around these two focus hubs. The reason why Shell were selling was quite obvious. In 2018, they had a $6 billion divestment goal globally. So this was, they were heavily incentivized to get rid of assets that were non-core in their portfolio. In addition, the two fields, Draugen and Yoa, although significant for Okia and Bangchak, represented only 6% of Shell's 2P reserves on the Norwegian shelf. So that they were sitting at the bottom of their portfolio. And also what's just as significant is the fact that large reserves replacements become more difficult in these mature basins. So Shell looking at significant large fields to constantly replenish their reserves. So Okia is a Norwegian company. It's producing around 18,000 barrels a day, low operating lifting costs, and around 90 million barrels of 2P and 2C reserves and resources. It has two fields, as I mentioned. So it has two fields on production, Draugen and Yoa. It also has a couple of developments as well, and I'll talk a little bit about them and the focus that we've put on with Okia with regards to this strategy. So it comes back to these new smaller operators, agile and nimble, lower cost. How are they going to extract value? And what we've been able to achieve and what we're focusing on is operationally excellence in mature fields. Shell are a very, very good operator, very, very competent operator, but we are able to extract and lower costs and improve operational efficiency at some of these fields. Development of small and marginal fields, as I said, we see the opportunity to have a look at sub 100 million barrel developments, and also the redevelopment of shut-in and abandoned fields that have been lying idle for several years. So mature fields, Draugen, as I said, is operated by Okia. It's a world-class multi-Darcy reservoir. It's almost produced 1 billion barrels. So it's it's a textbook field. Fantastic producer for many years. It's got about 60 million barrels of 2P reserves remaining. And what we've been looking at as a strategy is the obvious things. Looking at cutting OPEX and trying to flatten the lifting costs as we as a mature field continues the production decline, lifting costs increase. We've been looking at smaller and minor investment projects where, as I said, for Shell, they weren't of significance, so they weren't considered as something that they want to invest in, especially in these old mature fields. We also inherited a world-class operations organisation from Shell as a part of the transaction. And a big part of the recent work we've been doing is changing that mindset, which has a lot of knowledge that has been brought across from Shell, changing that from a harvest mode where we're just producing barrels and taking the cash flow to a development mode where we're looking to reinvest cash flow and extract more value out of it. Technological advancements, pretty obvious, 4D seismic, broadbands, enhanced oil recovery techniques, and also looking at Draugen as a hub. It's got a huge amount of spare capacity. At its peak, it was producing 200,000 barrels a day of crude. It's now producing 20,000 barrels. So significant spare capacity there, which can be utilised as a tieback hub for other fields in the area. So what we've been able to do is reduce lifting costs. We've shot new 3D over basically the entire greater Draugen area, where Okia has picked up a number of exploration licenses and also some discoveries as well. So we've shot a blanket 3D over that to be able to, calibrate the data set against the discoveries, but also looking at new exploration targets. We also are looking to sanction the Hasselmus discovery as a tieback into Draugen. That's going to be sanctioned in the next couple of months. And we've also done an exploration land grab and farming in and around Draugen, because we really think that a key part of extracting value is to create Draugen as a hub, and to make sure that we're involved in any new discoveries and new developments in around this. So our ambitions, there's pretty obvious ones: OPEX and CAPEX, reducing costs as much as we can, production as well, increasing the availability, and increasing the reserves, improving the recovery factor. You'll see from the plot down here that this is a oil production versus time, and this is Shell were the operator of Draugen the last couple of years, where Okia has taken over operatorship. And what we've recognised is Shell are an international, world-class operating organisation, but what they did was their policies and procedures weren't optimised for the Norwegian continental shelf, and specifically for late life mature fields. They had blanket policies across their entire organisation that basically didn't allow them the flexibility to optimise and make their production operations more efficient. So we've been able to review them and adjust them to make them more fit for purpose for a mature field on the Norwegian continental. And that's allowed us to quite simply increase production efficiency by 4%, which for Shell doesn't move the needle, but for someone like Okia and Bangchak, 4% improvement per year is $7 million in EBITDA at $50 a barrel for Draugen. So, which is significant, and as Bangchak as a shareholder is something that we're pushing Okia on to improve that even more. I mentioned Hasselmus as a tieback, so this is quite an interesting discovery. It was drilled by Shell. It was a freebie as a part of the transaction, and it was considered a failure. It discovered gas with a very small oil leg. They were targeting an oil. They were expecting oil, and they could tie back to Draugen. It's been left essentially there with no interest from Shell to develop. 17 million barrels of oil equivalent. And what we're going to be able to do is sanction that field as a tieback, an attractive tieback with a break even of around $20 a barrel, full cycle, to tie back to Draugen and extract value. We're able to use the gas as a substitute for diesel, which we're currently burning for fuel on the platform, which in the North Sea, there is very strict regulations, and CO2 per barrel metrics are something that your share price is significantly influenced by. But we also see that it allows us to add topsides to Draugen and add in some gas processing optionality, which improves the attractiveness of Draugen being a tieback for future gas discoveries and other things in the area. We've also acquired the Galfort license here, which is another small gas discovery, which we're looking at tying back into Draugen. And we've also farmed into this exploration license here, where the Calypso prospect is going to be drilled in the next 12 months. So there really is really positioning ourselves to make sure we take advantage of as many of the opportunities that are sitting in and around Draugen. In addition to Draugen, we're also trying to replicate and look at other small field opportunities. And we acquired the Grevling discovery in 2016, about a 40 million barrel discovery that hasn't been able to be made commercial by Repsol, the original operator. So we acquired it from Repsol in 2016. And we also acquired the neighbouring Storscrimpton discovery, about 10 million barrels, 2019. And what we're looking is a joint development of these two fields together in order to make them more commercial and more attractive to the company and to the shareholders. In addition, we also picked up an exploration license to the south, drilling 2 exploration wells there. starting in Q2 of 2021. So we're all of us we're trying to position ourselves here where we're going to make Graveling a new development hub, and again with spare capacity to allow exploration opportunities and discoveries, but also neighbouring third-party opportunities to discoveries to tie back into Graveling as well. This one as well is the EMA field. So this has got an interesting history where, again, Okia is a partner in this block. Produced for several years back in the early 90s when the oil price was low by Statoil. And at that time, Statoil made the decision to shut in the field. One, because of low oil price, but they also had some bottleneck issues with water handling capacity. And with the low oil price at the time, they didn't see the benefit of refurbishing the existing facility. So they shut the field in, and they relinquished the license. And what we've done is Okia picked up the license in 2016 and have basically turned it from an abandonment liability to a redevelopment. And we're looking to development has been sanctioned, and it's going to start production in the next probably 12 months or so, maybe 6 months with COVID. But it's going to start production at 35,000 barrels a day gross, and around 50 million barrels still of 2P reserves. So some significant value and barrels have been left behind by some of the larger companies. A prime example of where smaller operators with some new ideas, fresh ideas, innovative contracting ideas and opportunities to come in and extract a significant amount of value out of an old field, unloved field. So then, how do we look at? We take all of that. We look at operational excellence in mature fields, development of sub 100 million barrel fields, and the redevelopment of old fields. How can we take that into Southeast Asia? And also, how is that relevant to the existing landscape in Southeast Asia? This again is the same plot: M&A transactions versus time for the last 20 years with the oil price plotted, and you'll see you've got a fairly similar M&A history. However, with a couple of noticeable differences. Got a huge spike in 2013, 2014, where national oil companies were acquiring some significant assets, portfolios from some of the large independents, the Murphys and the Hesses, who were exiting or divesting some of their portfolios in Southeast Asia. So we saw some significant activity, but then obviously with the oil price falling away, we saw an even longer period of almost no M&A activity through this low oil price environment. Again, down to most likely the differences between buyer and seller expectations, with potentially some of these buyers, some of these sellers having already bought in the higher oil price environment and not willing to sell their assets at with a low oil price forecast. But then since then, the activity has picked up. We've seen some of the further independents, some of the North America focused independents again exiting or managing their portfolios in Southeast Asia. But again, we've seen the national oil companies dominating the M&A landscape. So where does that leave us going forward? 2020, there's been a few transactions in Australia, and there's been a handful in Southeast Asia, but it's obviously been limited for obvious. But will there be a continuation of these large independents and some of the majors exiting Southeast Asia? And who are going to be the buyers? Is it going to be a continuation of the national oil companies, or is it going to be an opportunity for some smaller, low-cost operators to come in and take advantage of these portfolios and extract value? So with that in mind, what I've also tried to do here is provide you with a field size distribution to demonstrate the yet to find potential in the entire Southeast Asia region. And again, what you see quite similar to the North Sea is that the basin or the area is significantly underrepresented in sub 100 million barrel fields. So we see the opportunity for small companies with a strategy of sub 100 million barrel developments and focusing on these small fields to come in and extract value from Southeast Asia, very generally. There is still some significant opportunities, the more frontier, high risk, high reward opportunities as well. But as there is a continued focus on developments and near field exploration, we think that there's opportunity for companies and focus on these new fields. What's going to be required here is material investment. That's something that is a key difference between the North Sea, I think, and what we see in Southeast Asia is the fiscal and regulatory environments in the really to stimulate investment and reinvestment of cash flows back into exploration and development. So here's a couple of examples in Southeast Asia. So the West Lenapakan field in the Philippines. This is a field that quite similar to EMA in Oikea's portfolio in Norway. Produced for several years in the 90s. Produced 8 million barrels before being shut in because of high water cut and low oil price. It only produced 7% of its estimated P50 STOIIP, and it was drilled and developed on 2D seismic. Recent redevelopment solutions that have been looked at are involving targeting reservoir sweet spots on the newly acquired 3D data that we have over the fields, and also quite simply just using horizontal producers, which back in the 90s was not something that was considered. So some of these unloved discoveries that have been lying idle for many years, there's the opportunity to take initiative and have the appetite to look and use new technology as extracting value from these unloved discoveries. And a bit closer to home in Thailand, Ophir have done a great job with Bulawang. They acquired the first ocean bottom node survey on Bulawang field, and that has significantly improved recovery, and it's identified infill drilling targets from the primary producing reservoir. And this is a good example of bringing in new technology to be able to extract fresh barrels from a maturing field. So opportunities and challenges. Who's going to sell? I think all of the majors are either have assets for sale or are considering have suggested that Southeast Asia portfolios are non-core. Shell's currently got Malampaya, the field in the Philippines for sale. Exxon have Malaysia and Thailand assets for sale. Chevron have recently sold out of Malampaya in the Philippines last year. E&I have got their Australian assets for sale, their entire Australian business. Repsol have got significant ambitions to reduce their CO2 per barrel metrics and have suggested that the Southeast Asia portfolio is for them. So there's going to be assets and potential opportunities for companies to go in and take some of these large portfolios. What there also is the opportunities to take some of the innovative transaction structures that we've seen in the North Sea. Leaving abandonment with the sellers is something that I think is something that needs to be considered or should be considered, especially for smaller companies looking to acquire. We think as well, given that there is the dominance of national oil companies, PTT and Pertamina, that there's the opportunity to set up collaborations with independents and smaller companies to extract more value, use lower cost operating methods to extract more value from some of their portfolios that they've acquired. We talked about small and marginal field development focuses, new technology in 4D seismic and EOR techniques, and a focus on strategic hubs. Oikea's been able to essentially have a big land grab around the Dragon field, and I think that there is opportunity for companies to do that with some of their crown jewel assets as well. But Southeast Asia has some challenges as well. There's the fiscal and regulatory environments. I touched on it before, but investment needs to be stimulated. In the North Sea, you're incentivized to reinvest cash flows and profits back into developments and exploration. You've got the dominance of the NOCs. Are they going to be increasing the M&A competition? Absolutely, especially with their current strategies, and also the fact that without the collaboration with some of these smaller companies, that maybe there's limitation of innovation and also investment in some of the smaller opportunities that exist within their portfolio. There's the abandonment liability uncertainties, of course. I mean, the Gulf of Thailand is the prime example where the scope and the policies aren't in place, so there's huge uncertainty around the future and how those abandonment liabilities are going to be addressed. Border disputes, obviously the South China Sea and the OCA are the key examples there. Macro volatility, China, Biden, pandemic, oil price volatility. I mean, there is a lot of uncertainty at the moment in the world and in Southeast Asia, so that certainly creates a lot of challenges. And I think on the back of COVID as well, we're seeing an acceleration in energy transition, ESG, and also a shifting in business focus and investment into more green-friendly assets and or opportunities. That's certainly what we're seeing in the North Sea as well, is that a lot of money is being poured into more green-friendly industries as opposed to what we call dirty industries. So there's certainly some challenges that need to be addressed for Southeast Asia, but having said that, I think that there's still opportunity for companies to extract value in the wake of large independents and majors divesting their portfolio. That's it. So yeah, thank you very much. I want to have also a special thank you to Parachat, who's our lead geoscientist. He did a huge amount of work on this talk. So yeah, thanks, Parachat.
All right, thank you. Question times. Please raise your hands and tell us who you are, and then fire away. There you go.
I'm Bob Pyle from PTTEP. Actually, we've met in Perth a few years ago.
Yeah. I remember Bob.
Okay. How is Bangchak? How do you manage the decommissioning cost on a field like Dragon? Because I mean, with that type of platform, it's going to be huge. And who actually? I mean, is that taken into account with the transaction, or is Shell going to come back and pay a share of it, or how does it work? Because I mean, this is usually the reason that companies like Shell divest these things, because they can see this looming in the future, and unless you can make discoveries, or unless you've got satellites to prolong the length of the field, you might be facing a huge decom cost.
Yeah. Absolutely. That's a very good question. I think there's 2 points to that. I think the key one is that the cost, the net, well, we push some of the costs back onto Shell. That's the first thing, and I think that has allowed us the flexibility to not have that burden. But you're right, it is a huge platform, and you saw the photo. It's quite an intimidating facility, and what I actually see is potentially the technology for decommissioning platforms and fields like this hasn't yet been fully been resolved. And I think that it could be that Norway has a really strong focus at the moment on offshore wind farms. Equinor has invested I think $2 billion on offshore wind farms as well. So it could be that some of these larger platforms actually stay there and end up becoming wind farms as well. So yeah, so it's something that is an interesting point, and some of the decommissioning, there's Aberdeen has been transformed into the decommissioning capital of Europe, and I think as we see more and more fields come to the end of their life, the decommissioning technologies and efficiencies is going to significantly improve. So so I think that's our view on it anyway, for sure. But it is an imposing structure, and the day that has to be decommissioned will be something for YouTube for sure.
Anyone else? Okay.
Thank you for the talk. Alan Pitts from a not so nimble, not so quick, large international oil company. Thank you very much for the talk. I really do think there is an opportunity for all companies in this industry. I guess the questions is on the environment the governments can create within the countries to create this investment. What lessons do you think the Southeast Asian governments can take from the North Sea in relation to stimulating activity like this?
Specifically in Norway, they have quite a unique fiscal regime, and the tax rate in Norway is 80%. So if you produce a field and take the profits, you will be taxed at 80%. However, if you reinvest that cash flow back into your portfolio, into exploration and into developments, you can recover between 75 and 90% of those costs. So someone once described me as almost golden handcuffs. So you're almost forced to reinvest your cash flows back into your portfolio. Otherwise, you're paying 80% tax. So for example, in Norway, if you drill an exploration well and it's a dry well, you can either take a 78% tax shelter on the next year on your cash flows, or if you don't have any cash flows, you basically get that back in cash to reinvest back in other, in a development or in more exploration. So it's actually the Norwegian state that funds a lot of the activity, and they have a significant bank balance to be able to do that. But I think that's the extreme end. But I think in Southeast Asia, some incentives to reinvest cash flow would help, I think. Yeah.
Okay. Any
Any
more
more
questions? Okay, I'm gonna count. 3, 2, 1. Last chance. Okay, all right then. So thank you very much, and may I invite, instead of Kun Rono, I'm gonna invite Kun Thanyawadi instead. She's our Wise Lay Song for Industrial. Can you come up on the stage and give the token of appreciations to our speaker tonight, please? Got by surprise. Okay, then move on with the program. We still have a few closing remarks.
โอเคครับ The man with the red hat back again Hope you enjoy the talk. Okay,ครับ, for few closing remarks before we go to the lucky draw. So starting from next year on 21st of January, we'll have our semi-virtual meeting again, same as the one that we have last time. Topic will be drilling automation is here, propagation, pitfall, profits, and production by Kun John Dewar. In February, we will have Dr. Thana from AI and Robotic Ventures to tell us how we could steer AI and robotic technology in our industry. And last but not least, for the first quarter, we will have Kun Pairot, who is also here with us tonight, sitting and smiling in front. Share us very touching topic, I think, the future of energy. Not sure is it oil and gas or renewable or what, but anyway, that will be on the 18th of March. So in conclusion, we will have our routine Thursday of every month for technical meeting in Landmark here. Yeah. And the update, of course, can be found in our website. SPE Asia Pacific still continue to organizing several of virtual workshop and events. As you can see here, they're all virtual now. So, oh, that's fancy. Okay, Kap. Not sure if I should continue. Anyone listen to me or distraction? Okay. Here, look at here. Okay, Kap. So, okay, you can enjoy this event from home because they're all virtual. Our neighbor, SPWA, has no meeting this month, but if you are interested, you can follow up other upcoming session in their website. And although a year away from now, not so far away now, maybe half a year, AIPN will have annual summit here in Bangkok on the same venue that we host SPE Thailand 40th anniversary, the Mandarin Oriental Hotel. Not only the grand event, AIPN have a regular activity which can be found on their website as well, aipn.org. Last but not least, there are multiple ways to get in touch with us. You can go to our website. You can go to our Facebook here or LinkedIn. You can simply pick up your phone and scan the QR code here to go to any of our session. Then, and I think here's the highlight. Where are those people now? Okay, tonight we have 2 lucky draw. And can we have Kun Marshall back on stage again?
David Remus. Well done.
Congratulations, Kap.
Photo, please. Photo, please. The most important thing, photos.
Come with the prize.
Okay, one more.
Kitachai.
Okay, a very special prize as always. This one is the water tumbler and their
Special design, limited design bag from SPE.
yeah, the tote bag, celebrating our 40 years that most of you joined us in February. Thank you very much, Marshall. Yeah, we were wondering if there's still, the Huntsman still open, but you feel free to check it out. And if you
Okay.
go there, it's open.
Maybe you go
okay,
there.
excellent.
Okay. So if our drink is not enough for you, still have some more room, then of course, let's go to Huntsman. We have 2 for 1. SPE usual ครับ And this concludes the session for today. Thank you very much for your support to SPE. Merry Christmas and Happy New Year ครับ See you next year. Thank you.